And two outstanding questions from Timothy here. One is why use the WRI, World Resources Institute, as opposed to some other method? And then the second question is back to the innovation. Have any of these insights around carbon yet created new products outside the industry, new bonding materials or new material substitutes that are not only sold either in the playground market or construction market, but in new markets that they haven't yet sold to from their suppliers?
WRI has been establishing greenhouse gas protocols, that is accounting standards, for about 10 years now. I think it's 9+ years. They are in the process of creating a new supply chain standard, which is due to come out in December of next year. I'll say as a side note that our chief scientist, Dr. Sangwon Soo, is one of the principal authors of that new standard. And I use them as the baseline standard because the ISO standards follow WRI very, very closely. And we think we're going to see some changes in Europe and the UK with the past 2050 standard moving more towards WRI and a hybrid and supply chain approach. Let's see. The other question.
Are there innovations that are being spurred out of, into other, so like Nike HIP has worked with Nike on the Green Exchange, which is an intellectual property exchange for environmental solutions, and Nike sees its water-based adhesive technology that it's putting in its shoes as a potential intellectual property license into industry companies and industries that are non-competitive with them. So has any of that happened yet at this early stage in construction or playground or other examples?
We're seeing enormous innovation in cement. That is, using cement generically for concrete. It's the glue that holds the aggregate together. Our customers have asked us to do some direct analysis of their suppliers, now 3 steps down in the supply chain, looking at alternative glues, as I like to call them, and verifying their lower carbon impact. I happened to be at the Clean Tech Open yesterday and saw a lot of innovation as well in construction. We see a sort of battle emerging. It looks like steel is more recyclable, and so we see the innovation in steel not in the makeup of steel, but rather in recycling of steel, and the innovation in concrete focused on new concrete mixes.
Very exciting. I don't day-to-day think about innovations in cement, so I know Vinod Khosla is very concerned about it since it's such a big greenhouse gas contributor.
Yeah, it's as the cement or concrete manufacturers say, we've been doing it the same way since the Roman times. There's a lot of room for innovation. So just to wrap up, we see that supply chain carbon metrics are here. We've been working in construction and other industries, but construction in particular, to look at construction projects, to measure those, to build a base, to look at detailed suppliers, build a very large-scale database of supplier-specific greenhouse gases and metrics that can be used in the industry. And we're helping companies across the industry understand their products in more depth. And we think, sort of circling back to the beginning, that we are seeing companies planning for cost avoidance as oil and fossil fuel prices begin to increase. We're seeing a lot of innovation in concrete with new glues. We're seeing companies indirectly generate revenue based on the quality of their products and the knowledge, simply the knowledge of their greenhouse gas impact. They're serving customers. For example, the San Francisco PUC building is delighted with the work that Webcor is doing because they're meeting all of their needs around carbon footprints, as are the Kyoto cities with Playworld. And both these companies are building reputation and culture which has long-term value to their businesses. We have time for a couple more questions.
Yeah, one more question is there a methodology for identifying additional environmental concerns? You talked about toxicity of paint before, in addition to carbon accounting, just in keeping in mind that full environmental perspective, and then the question also talks about social perspective.
So I think there's 2 questions. Yes, the answer is yes. Our company's been focused on carbon because it's highly impactful and there's a lot of attention around it because of global warming. The same kind of approaches, database-driven approaches that we use for carbon, can be readily applied to other factors.
And Chris, if you have any examples as I walk through this, we've talked about how to profit from sustainability in terms of looking at the analytics. Those analytics generate insights into how to re-engineer your operations and obviously your materials inputs. Some other management systems that we've seen from the research across more than 500 S&P companies in the S&P index are these 5 core areas of vision, measures, financial alignment, accountability, and decision making. So just to highlight, a company like Interface, which makes office furniture and is doing so in an increasingly sustainable way. And Ray Anderson, the CEO there, has a new book out that you might want to check out. They're targeting to be carbon neutral completely by 2020, which they started in the early to mid 90s. So it's taken them 25 years to get to the point of working that out. And DuPont is looking to realize $8 billion from new environmental products. So companies that are leaders are embedding this into their strategic planning, which you might be doing for your enterprise right now for 2010 or 2011. And then working that into a balanced scorecard. So, for example, at General Electric, greenhouse gas reductions are a target, and there's accountability for that in your performance review in each of the business units of GE, the industrial, healthcare, eco-imagination. So for Interface, that's helped them focus on $400 million in avoided cost and cost savings, as well as revenue generation for GE's eco-imagination products, and some firms are taking advantage of the U.S. Treasury's tax credits for investment. So the more you can integrate this greenhouse gas, carbon, sustainability view into your business, those end up, as we see on the next slide, those end up driving impact. So the more you integrate it into your management systems, the higher impact you can become. Now, even for the same sort of management approach, there's a wide variety, as you can see there, of performance. But that's what we're seeing in the market. So, and to answer the question about the 10-point balanced scorecard, the balanced scorecard is a concept put up by Kaplan and Norton, Professors Kaplan and Norton of Harvard. And the 10-point scorecard includes measures ranging from customer satisfaction, employee satisfaction, environmental sustainability, also including safety, financial metrics, equality metrics, and a couple others. So it's a wide-ranging scorecard. Companies, that's a pretty aggressive one. Companies tend to have 4 or 5 core metrics when they use a balanced scorecard versus the 10. Tara, do you want to bring us home?
No, I think that's it. We just really want to thank Chris Erickson for being with us today, and Paul, you as well, and for everyone joining us and providing these great questions. If there are any more questions, please do contact us at the contact information that you see here on the slide. Thank you again for attending. Chris, Paul, any last words?
I'll give a last word. Go out there and create some savings for the world to make it more hip, to put us on sure ground, and to make sure we have a climate Earth that's clean.
Thank you all for attending.